Well, howdy there, folks, and welcome into today's video. We've got to talk about valuations in the market. I'm going to take you guys through a lot of charts today, show you a lot of data around the stock market, where the stock market's valued, what you should be prepared for, my opinion on all this. So we're going to take you through several different charts today, and I'll give you my perspective on what these charts mean as an investor out there. How should you be thinking about this and these sorts of things? So I've been investing now for about 13 years, and in stocks specifically. And so I like to look at valuation sometimes, where the market's trading at, and those sorts of things from time to time. Most of my time is consumed with researching actual individual companies and trying to find the next great stock, right? The next stock is going to 2x, 3x, 4x, whatever, right? As well as like looking at my portfolios from time to time and making sure they're diversified, making sure I'm in the type of positions I want to be in, and those sorts of things. And that's where most of my attention is when I'm spending time on stock market related things. However, every once in a while, maybe once a week or maybe once every few weeks, I like to really look at where the market is at in general as far as valuations. Are we in an overvalued, may I say, bubble market? Are we undervalued? Are we fairly priced? And kind of, those sorts of things. So I'll give you my perspective on this. I'm going to kind of take you guys through these charts and how I look at them and those sorts of things. So hope you guys enjoy this as always. If you don't mind, smash that thumbs up button. That helps us out huge in the YouTube algorithm. I don't know what channel I'm going to post this on. I might post it on the main channel. Might post it on my third channel. I don't know. We'll see, guys. But anyways, hope you guys really enjoy this. Hope you get some good value out of it. And let me know your opinion in that comment section. I'd love to hear from you guys. As always, let me know if you enjoy a video like this where I kind of talk about the markets in general and we go through valuations and things like that. By the way, less than 48 hours left to take advantage of that huge once-a-year sale we're having on Becoming Master of the Stock Market course. So yeah, that's ending very soon. So if you want to take advantage of that before it ends, it will be the pinned comment down there. Enjoy that, guys, and learn lots from it, right? So what I'm going to take you through here is Yardeni Research, okay? So I want to make sure I give them a shout out here because they put together the charts, and then I did a few other things off of that essentially, and I'll show you guys a few things off that. But what we're looking at here today is a whole bunch of charts out of Yardeni Research. So shout out to Yardeni for always putting these charts together. These are super helpful. They put together a lot of pretty cool stuff in regards to the stock market that somebody like myself I don't have time to compile all that data and put all those things together, okay? So first thing we're going to look at here, okay, I'm actually going to make my face a little smaller here. First thing we're looking at is this shows you forward PEs for the S&P 500 essentially, okay? And this first one we're looking at S&P 500 large caps, all right? Now this little red line, I made that red line there. That's not Yardeni, I put that in there. That's just to show you reference of where we're valued at right now. S&P 500 large caps are trading, to be quite frank, very expensive. Very, very expensive. When we're talking about forward P, we're looking at the next 4 quarters of profitability, all right? So it's not like we're taking the last 4 quarters into account. Maybe there was some Rona in those numbers and, all those sorts of things. No, this is looking at the next 4 quarters, okay? And we still find that we are trading extremely rich, and I mean extremely rich, when it comes to large cap S&P 500. So when I look at this chart here, I say to myself, okay, the economy is getting back on track, right? And will continue to throughout this year, throughout the next several quarters. But a lot of companies haven't really been hurt by this, and especially a lot of large caps. Amazon, that makes up a huge weight of the stock market, right? Amazon's been helped, if anything, by this whole situation. Apple has actually probably seen stronger numbers than ever, despite whatever's going on, right? Google, same exact situation. More people at home, more people spending time at home, better numbers for Google, better numbers for YouTube and things like that, right? And so, this is where I'm a little divided here because I look at these large caps and I say a lot of these large caps have done just fine in this whole situation and have actually seen their businesses accelerate growth. Facebook, has Facebook really been hurt by all this? Maybe a little bit. Some businesses aren't advertising as much, maybe because they haven't been open and things like that. But at the end of the day, come on, man. People spending more time on Facebook and Instagram and WhatsApp and whatever, buying Oculus headsets, that's a good thing for Facebook in the end, right? And so when I look at it from that perspective, I say we're trading rich, very rich, for S&P 500 large caps. And this is why I haven't been buying a ton of large caps. I haven't been buying a ton of stocks other than actually Facebook that are $100 billion plus market caps recently, because I'm looking at valuations. I'm saying they're just not very dang attractive. Like, best case scenarios I'm finding with a lot of large caps is like, it's okay. It's an okay deal. I'm not finding great deals in large caps. No way. Okay. There are certain time periods when you look at large caps and they are a good deal. And it's like, let's load up on large caps. Let's buy all the FANG stocks or whatever. And there's other times you look at it and you're like, yeah, we're a little rich. And right now, I mean, look at that. I mean, this is epic. Okay. I mean, it's not like it's like, oh, I mean, imagine if it was like right here, it'd be like, okay, we're, higher than we've been in a long time, but it's not like crazy. I mean, we're way up here, guys. I mean, look at this. This takes us all the way back to 2006. And I mean, we're just trading way up there, guys. So what you should, and it doesn't mean the market can't grow into that over time. It just means in the short term, we're frankly overvalued when it comes to S&P 500 large caps. So what something like this should tell you is this should tell you the best opportunities in the market right now are likely not large caps, and not even close to being large caps, okay? And so that's what I refer to this chart. And then when I look at the actual individual valuations on most large caps, I find this, guys. I'm finding time and time again that just not great deals. Not great deals when it comes to large caps, okay? So that covers that first one, okay? Now we want to look at is S&P 400 mid caps. What we're going to find when we look at mid caps is we are still highly valued, right? Basically more highly valued than any time in recent history, other than obviously that one little period. And this is forward Ps once again, then that little period, when Rona just started taking off, right? Outside of that, we're the highest valued we've been at any point in the last 15 years, right? And so when I look at mid caps, I say, okay, more interesting than large caps, but still not great deals out there. And so, this is why it's like, to find really truly great deals in the market right now, I feel like it's finding needles in the haystack. I feel like you really got to be looking. You really got to be researching a lot of companies, because technically you can buy a stock at any price, right? Like Amazon today is valued at about, oh gosh, I would say Amazon's probably valued at about 1.5 trillion. I don't know exactly where it's valued, but probably 1.5 trillion roughly, right? Amazon could technically be valued at $15 trillion today. And that just probably means Amazon is a disgusting ripoff, okay? It's just the way it goes. You can't pay any valuation for any stock. And so this is like a cardinal sin I see that happens with newer investors that get into the market, is they look and they say, they'll basically pay any valuation for any stock out there, regardless, just because they like the stock and they think it's going to grow into the future. And it's like, it's just not a sustainable strategy over time. When it comes to stock market investing, it's about the fundamentals, it's about the financials, and then it's about the valuation. Those are the three main components to picking stocks successfully over a 5, 10, 15, 20-year span, okay? In the short term, you can get away with not looking at financials. In the short term, you can get away with not looking into fundamentals. In the short term, you can get away with not looking at valuation. But over the long term, it will always come back to bite you, right? I mean, you just happen to throw money in any stock almost out there at the lows when March 23rd or whatever, the market hit. You could have thrown money in almost any stock in the stock market and probably made money over the last year, right? But there were certain stocks that were better opportunities than others. There were certain stocks that didn't perform nearly as well as others, right? There's certain stocks that are up hundreds of percent or thousands of percent since then. And so it's really about looking at it from a valuation standpoint as well. And this is why I like to bring out valuation. And a lot of times when I do my stock breakdowns on like 3 stocks I'm buying and things like that, and when I talk with the folks in my private stock group and things like that, we don't just talk about the fundamentals of the company. We don't just talk about the balance sheet, and we don't just talk about revenue and net income. We talk about valuations. We talk about P metrics and forward P metrics. Forward P metric is always the most important metric for me. I'll sometimes look at price to sales ratios and things like that, but for me, it's always forward PE, okay? Unless it's a hyper growth company, and it's a little different. Then I'm looking at the realistic TAM opportunity for that company, and we're kind of going from there, okay? So this chart's going to basically tell you mid caps, not a great deal there either. You can maybe find a good deal here and there, but most are frankly overvalued, okay? Now, if we look at small caps, this is going to show you we're still overvalued. We're still overvalued. However, notice how close this line is to other time periods in the past. What this is going to show you is your biggest opportunities in the market right now are truly in small caps. So if I'm to look at these past 3 charts we just looked at, I looked at large caps, I looked at mid caps, and I looked at small caps. What my brain is telling me as somebody that's been in the stock market for a long time is focus my attention on, you know, S&P 600 small caps and small cap stocks in general first. Let's focus on that first. Then after that, let me focus on mid caps. And lastly, if I focus at all on it, large caps. That's what I want to do, okay? That's what these charts are telling me. Let's focus on small caps. Let's find good deals. And I will say, I have been buying a lot of companies that are $5 billion or less market caps. Actually, I would say the majority of stocks I've been buying recently have been $5 billion or less market caps. There's been a few that I bought that are over that. But you think about some of the stocks I've been buying recently, right? What are some of these stocks? A Corsair Gaming, $3 billion, less than $3 billion recently. Tattooed Chef, less than a $2 billion market cap, right? GGTTF, that's a really, really small market cap, right? And so you think about a lot of these stocks I've been buying lately, then there's the FB, okay? That's a special situation, right? That's a special large cap with what's going on there in Oculus and things like that. But for the most part, I've been buying a lot of stocks recently that have less than a $5 billion market cap because that's where the true opportunities are. There's just a much higher probability I'm going to find a good deal right now in small caps versus finding a great deal in a large cap or mid cap right now, okay? And so that's what these charts show me so far here. All right. Now, what we're looking at here, this is also looking at S&P 500 large caps, but we're taking this all the way back to the tech bubble. Okay. And, you know, a chart like this should worry you. It really should. It should give you a little sign for caution. And when you see a chart like this is why, you know, when folks talk about the market could go down 10, 20%, some say more than 20%. But when folks say, you know, at some point this year, we could get a 10, 20% drop in the market, look at charts like this, and it's going to explain a lot to you, okay? You know, you're never going to find S&P 500 large caps trading anywhere remotely close to where they are unless you go all the way back to 2000, 2001 tech bubble when it was kind of going bad, right? The good news is we're not all the way up to where it was at peak tech bubble, but the fact that you have to go back 20 plus years to find a time period where we were trading that insanely rich, that should give you a little pause there and a little bit to say, okay. You know, when folks want to act like, you know, there's no downside in this market, I'm like, you know, this market could easily go down 10, 20%. It doesn't mean it's going to happen. And it doesn't mean it happens quickly. Everybody's always like trying to, you know, say there's going to be a stock market crash or something. And a stock market crash coming. It doesn't have to be a stock market crash. It doesn't have to be a stock market crash. Like, it could just be a bleeding of the market that lasts for, you know, a few weeks at a time. Or, you know, a few months at a time. Or maybe over a 6-12 month span. And maybe just every month the NASDAQ's a little lower than it was a previous month. S&P 500 is a little lower than it was a previous month. It could just be a slow kind of bleeding of the market that takes 6-12 months to kind of reach the bottom before we start going up. But I will tell you, a market like this for me to invest in is, I don't want to use the word scary. I don't want to use the word scary, okay? And we're going to talk about a few stocks I've been buying, and we'll talk a little bit about this more in depth. You know, we're going to get into this, but, you know, we got more stuff to talk about here. But I just want to, you know, focus on me talk. A market like this, I don't want to say it's scary for me to be investing in, but it is a market that I say, you know, whenever I look at the market, I say, what's a realistic scenario where this market could drop 10, 20% real quick? Most of the time, it's not that realistic, especially if we're talking 20%. This type of market's different. This type of market, when we're valued at the type of prices we're valued at, you know, it doesn't mean don't invest in the market, but you've got to really be behind the creme de la creme positions when it comes to not just the fundamentals and the financials, but the valuation. The valuation matters. It matters, guys, and it always ends up mattering in the long term, okay? Make my face back small again here, okay? So now we're looking at 4 Ps of the Russell 2000, okay? Growth stocks are trading just G's, okay? That's the best way to describe it. G's. You know, ridiculous, okay? Russell 2000 in general is trading pretty high right now, but a lot of those are smaller companies. A lot of them will bounce back, and a lot of those will hurt the worst in this whole scenario, okay? But ultimately, what this shows you is you got to be really careful with growth stocks right now, okay? Now, once again, we get into this whole thing where there's a time period we're in right now where people just want to focus all around just growth stocks and those sorts of things. And I love buying some growth stocks. I love growth stocks, okay? But let's be quite frank. We're up there. We're up there. We are up there, okay? I mean, just woo, okay? By the way, you want to take advantage of that huge once-a-year sale before it ends. It's linked in the description. Also have as a pinned comment down there. But when it comes to valuations in general, they're up there right now, okay? And so this is a time period when you got to be very, very selective, very, very selective with what stocks you are buying. You have to really understand on a high level how to actually value these stocks. What are the things to be looking for in these stocks? And trying to figure out if you're getting ripped off in a stock. Like for instance, right? Like people have a very bad perception of the stock market. They think they can pay anything for any stock as long as it's got a good story, okay? So I don't know, I got this microwave behind me, right? I could use this microwave and I could say, this microwave, it can heat up your food, it can do blah, blah, blah. I'm going to sell it to you for $50,000. Of course, you're going to look at me and you're going to be like, that sounds like a ripoff. Can that like microwave like make bitcoins while it's cooking some stuff too, or like mine some Bitcoin or something like that? Because this sounds absolutely ridiculous. Okay, I'm not paying $50,000 for a microwave. But in the real world, we all understand that because we understand pricing and we understand that that microwave, we could go get that microwave for a few $100 at blah 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 store, right? And so it makes no sense to pay up. But when it comes to stocks in the market, people have no clue how to value stuff because they haven't been doing this and they haven't been doing this for any good amount of time. And so they just see a stock and they're like, oh, that company's doing good. I'm going to buy that stock. And it's like, that strategy can work for a little period of time, and it doesn't work over the long term. You have to know if you're getting a good deal, a great deal, an okay deal, or ripped off. Okay? You have to be able to do that if you really want to maximize gains and minimize losses in this game over time, guys. And so when I think about some of the stocks I've been buying recently, you know, something like Corsair Gaming trades at a forward P of 20-ish, which is, you know, for the growth that company has ahead of itself is pretty darn cheap, in my opinion, okay? I've been buying Tattooed Chef, which is a company that if you look at a forward price to sales ratio, trades a lot cheaper than a lot of food and drink companies that have way less growth in that company moving forward. And so I look at that and I say the fundamentals line up, the financials line up, the management team lines up, and the valuation lines up. Same thing with the Corsair Gaming. So I look at some of those opportunities in the market and I look out over the next 3-5 years and I'm like, I'm very confident I'm going to make a lot of money in this stock. Not just because I believe in the business is going to grow, but because of the way I can value these companies, guys. And this is something you have to be able to do in the market. If you can't do these sorts of things, like I said, you'll always minimize your gains and you'll always maximize your losses if you can't do this. That's just the way it goes, man. And so, you know, this is the most important thing. So I hope you guys kind of enjoyed me sharing these charts with you, taking these through, you through these. Let me know in the comment section if you enjoy a video like this. Maybe I could make it a weekly or every other week type video, and we can run through these charts. I've done it a few times in the past, but I haven't done it in a while. So yeah, let me know if you guys enjoy something like this. I can do this more often. If you don't mind, smash that thumbs up button. It helps us out huge in the YouTube algorithm. And I appreciate you guys as always. If you want to check out that deal before it ends, once a year sale and become a master stock market and learn lots from that, how to value companies plus a ton more, that's actually going to be linked in the description. Also have this pinned comment. Much love, guys, and peace.